the ultimate charitable act is to give all of your wealth to people that share your values forever. And the way to do that is to die with your Bitcoin keys. But at some point, ashes to ashes, dust to dust, you came into this world, you're a very inefficient energy container, and then eventually you will leave, and you'll go from being pure energy to being materialized energy to being pure energy again.
Hello and welcome to Crypto Street, where we bring you the latest and most intriguing stories from the world of cryptocurrencies. In today's video, we'll be unraveling the secrets of Bitcoin's future. But before we jump into that, let's take a look at some recent developments in the cryptocurrency market. The last 48 hours have been a nightmare for bears in crypto. Those who consider the ongoing upsurge a dead cat bounce and open short positions witnessed 9-digit liquidations. For bearish traders of Bitcoin, BTC, and some altcoins, yesterday's session was most merciless since early Q1 2023. 2. In the vast and thriving cryptocurrency ecosystem, with a combined market valuation of $1.2 trillion, a group of influential figures has emerged, the crypto whales. These individuals hold significant power in the distribution, trading, and accumulation of digital coins across various projects. To understand their impact, let's delve into the intriguing world of crypto whales and their rich lists, focusing on the top 10 most valuable cryptocurrencies and their evolution over the years. 3. Federal Reserve Chairman Jerome Powell has acknowledged that cryptocurrency appears to have staying power as an asset class in the U.S. economy. In addition, he stated that the central bank views payment stablecoins as a form of money, emphasizing the need for robust federal regulations in this space. This recognition from a prominent figure highlights the growing acceptance and importance of cryptocurrencies in mainstream finance. 4. Licensed since last year, the world's largest digital asset exchange, Binance, has now launched a trading platform in Kazakhstan. This move comes amid increased pressure from regulators in other jurisdictions like the US and after Binance's decision to pull out of several European markets. The expansion into Kazakhstan demonstrates Binance's commitment to adapt and explore new opportunities amidst a changing regulatory landscape. 5. Bitcoin's average transfer fee has surged 92% in just 4 days, with more than 330,000 unconfirmed transactions in the backlog. This surge in fees and congestion on the Bitcoin network raises questions about scalability and the need for solutions to improve transaction efficiency. 6. Caitlin Long, the founder of Custodia Bank, has railed against the favoritism that the Federal Reserve and the institutions of the U.S. financial system are supposedly showing to incumbents. According to Long, regulators have applied double standards when permitting established financial institutions to serve the crypto market and access instruments like Fed master accounts. 7. The Bank of Russia plans to pilot cross-border payments using digital assets and central bank digital currencies, according to a deputy governor. The top executive believes these alternative instruments could increase efficiency in foreign trade, while such settlements will not be permitted inside Russia. 8. The crypto community seems to be excited about the cage fight that two tech billionaires appear to have agreed upon. Twitter boss Elon Musk versus Facebook founder and Meta CEO Mark Zuckerberg. The clash of these influential figures from the tech world brings attention to the power dynamics and competition within the cryptocurrency space. 9. In the race for SEC approval, Valkyrie Funds has made a significant move by filing an application for a spot Bitcoin ETF. The approval of the Bitcoin ETF by the SEC would be a major milestone for the industry, opening doors to increased accessibility and legitimacy for institutional and retail investors. 10. Balaji Srinivasan, the former chief technology officer at Coinbase, recently took to Twitter to discuss Jared Bernstein's changed stance on de-dollarization. Srinivasan points out the shift in views by the new White House top economists regarding the U.S. dollar's status as a global reserve currency. This exchange of ideas reflects the ongoing debates surrounding the future role of traditional fiat currencies. Now let's begin our enlightening discussion with Michael Saylor, then going into the details of some of these events.
Well, I think the Bitcoin system is the entire system is a delicate balance between the Bitcoin holders and the Bitcoin nodes and the Bitcoin miners, and then all the Bitcoin applications and all the businesses and all the services that integrate into the ecosystem. So I think the humans are important because they drive the innovation in the economy, and they also drive the advocacy for the network, and without the advocates, right, then we would be at the mercy of hostile politicians and hostile corporate actors and hostile competitors. But without the innovation, we wouldn't have things like Cash App. You wouldn't have the on-ramps for institutional investors. You wouldn't have the technology to give Bitcoin to billions and billions of people. You wouldn't have the ability to improve the products and the services in the world using Bitcoin. So we need humans to create Bitcoin products and services. We need them to improve the protocols, especially the layer 2 protocols. There's a lot of work at the layer 2s. And of course, the layer 3 applications, there's a lot of work there. There's a lot of work to market, build, serve, distribute that functionality everywhere. Ultimately, I still think it's a balance. It's a natural balance. It's pretty important that Bitcoin consists of gigawatts of energy. We need real raw analog energy to be a basis of the network, but it's also important that we have all of the millions of ASIC miners and the semiconductors and that hash wall. And it's very important that we have a very distributed set of nodes for validating the system. And, Bitcoin is, in a way, it's a virus, and the virus spreads.
Mind virus.
Reproduces through the people. So ultimately, the reason that if Bitcoin's going to last forever, then it's going to have to be passed from you to your children, to your children's children, to your children's children's children. And each generation that adopts Bitcoin has to adopt not just the technology, but it has to adopt the ideology, right? Because at the point that, the future generation becomes corrupted and they forget the ideology of Bitcoin, then they will attempt to corrupt it one way or the other.
Yeah.
And that would be not good. So the technology itself can't propagate itself for the next 10,000 years without human engagement.
Bitcoin BTC has embarked on a remarkable journey since its inception in 2009, undergoing significant distribution over the past 14 years. This investigation delves into the intriguing landscape of the BTC Rich List and explores the rich lists of the top 10 cryptocurrencies in June 2023. Analyzing the statistics provided by CoinCarp.com, we can assess the magnitude of holdings by the top crypto holders. Here's a snapshot of the distribution levels for some of the prominent cryptocurrencies. Bitcoin, approximately 48.3 million unique addresses hold BTC. The top 10 wallets control 5.32% of the total supply, with 10.68% held by the top 50 wallets. Notably, 3 of the top 10 BTC addresses are exchange-operated wallets. Ethereum. Ethereum has 235 million unique addresses holding ETH. The top 10 wallets command 31.15% of the supply, while the top 50 wallets account for 38.92%. In contrast to BTC, 9 out of the top 10 ETH wallets are exchange wallets. Tether. On Ethereum, there are 4.3 million wallets holding USDT. The top 10 holders control 18.56% of the circulating USDT supply, and the top 50 hold 35.87%. All top 10 wallets for USDT are labeled as exchange addresses. These statistics highlight the varying degrees of concentration within the cryptocurrency market. Notably, BTC, ADA, XRP, and SOL exhibit more even distribution, indicating a relatively fair allocation compared to other coins on the list. As the crypto landscape continues to evolve, monitoring the rich lists provides valuable insights into the distribution dynamics and the potential implications for market participants. Federal Reserve Chairman Jerome Powell addressed questions about cryptocurrency and stablecoins during his testimony before the House Financial Services Committee. Congressman Warren Davidson highlighted the crypto market's $1.1 trillion market cap and asked Powell about its staying power in the U.S. economy. Powell acknowledged its staying power but noted the market's previous higher valuation. Davidson emphasized the need for legal clarity and mentioned upcoming bills, including one focusing on stablecoins. The congressman also mentioned the SEC's involvement in the crypto space and the importance of providing clarity for SEC Chair Gary Gensler, Congress, and industry participants. Powell expressed the view that payment stablecoins should be considered a form of money, suggesting a robust federal role in regulating them. He stressed the importance of avoiding excessive private money creation at the state level and emphasized the central bank's role in maintaining credibility in money across advanced economies. That wraps up today's crypto news highlights. Stay tuned for more updates, insights, and analysis from the world of cryptocurrencies. Please share your thoughts in the comments below. Don't forget to like this video and subscribe to our channel for more engaging content.